Hello, in this video we're starting chapter 4 for government and nonprofit accounting. So chapter 4 starts to look at governmental activities and recording journal entries for operating activities. The examples in chapter 4 follow the town of Brighton and really just look at the higher level recording. We're going to look at the more detailed reporting for very specific types of funds in future chapters, such as capital funds, debt service funds, business type activities. All of those things will be deeply discussed in the next couple of chapters, looking at the different fund accounts. So the first two financial statements we have are the statement of net position, and this is just taken straight from the textbook. So we have this statement of net position, and of course the book talks about how business type activities are not included because that is the focus of chapter 7. And so we're really just looking at governmental activities in chapter 4. So you can see where we have our assets, liabilities, and our net position. So this is, of course, a little bit different than what you would see for a typical balance sheet because we don't have equity accounts where we have in a business where we would have retained earnings, stock, those types of things. So we have assets, liabilities, and then net position. Then we have a general fund balance sheet. So our balance sheet, we have what we focus on for a balance sheet assets are things that are going to be cash immediately. So we're just talking about cash and cash equivalencies on the balance sheet. So you can see that as our assets are listed, it's not all of our assets. So we don't have any long-term assets listed. So this general fund balance sheet is just looking at things that are currently happening. So, unavailable revenues, fund balance unassigned, things like we have to pay the federal government. And we're going to talk through these different transactions as part of the journal entries for chapter 4. When we start looking at measurement, focus, and basis of accounting, so the government-wide statement of position is focused on our economic resources. So it's measurement focused. It does use accrual basis accounting. It's our current and non-current assets and liabilities, includes all governmental activities combined into one column. So further detail on our governmental activities gets included in the notes to our financial statements. And the governmental fund balance sheet is really looking at what are the current financial resource measurement focus. So where I said it's only current assets and liabilities, things that are going to happen in the next year, and the assets included on there are cash and cash equivalencies. So we don't include any supplies, inventories, prepaids, or anything like that. It's only cash and things that will quickly become cash. We're also looking at governmental funds only, and then it's in a balance sheet format. So these, not only is the accounting different for government, but then of course all of the financial statements and financial statement formatting is a little bit different than business type accounting. The dual track accounting approach. So where we have operating activities and transactions go in both the government-wide and fund financial statements. Some activities have no effect on the government-wide financial statements, but most affect both the general fund and governmental activities. And so what this dual track accounting approach is where we show the journal entries for both tracks. So often government entities just do the modified accrual. And then at the end of the accounting period, they have to do a conversion, which we're going to look at in chapter 9. To avoid looking at this and to really look at how this impacts, the textbook uses this dual track approach where we're going to look at the impacts side by side. Okay, so that's where it's talking about that it's really about learning and showing us the transactions and how they impact both the government wide financials and the fund financials that they are attributed to. Okay, so in chapter 3, we looked at recording the budget, and we had activities where we recorded the budget. So we have our estimated ledger, our estimated revenues, and our appropriations. So this is that dual track accounting where we're looking at both the general ledger, so the higher level, and the subsidiary ledger, so how it impacts individual funds in our subsidiary ledger. Okay. And then the next transactions that we're looking at right here are purchase and encumbrance transactions. So during the year, the textbook talks about how the city of Brighton ordered $59,090 worth of supplies. And when those supplies are ordered, we create encumbrances. So we record a transaction. We did this in chapter 3 also, where we record a transaction to record the encumbrance that we have promised the money in the purchase of supplies. Then when we receive those supplies, we compare the supplies that we've received with the vouchers. We record that. So the first thing that we do is we reverse the encumbrances for the amount of the supplies in which we received. So even though we ordered $59,000 worth of supplies, it shows here that what we received was a partial order, or we received $22,415 worth of supplies. So we're going to record that. We're going to reverse that encumbrance that we had. We're going to credit our encumbrances account, and then we're going to process the vouchers. So when we process the vouchers, we then have expenditures. So we record expenditures in the subsidiary ledger and expenses in the governmental activities ledger. So you can see where we have, these are the individual ledgers of each one of these accounts shown in subsidiary ledger, and then this is the government-wide activities ledger. So that's that dual track accounting where we're seeing the impacts on both things at the same time. And of course, we're going to practice this in our exercises, homework, and the city of Smithville. Okay, so we see further transactions here when here is another order. So we've placed an order for 15,000. We then the second thing is when we have received that $15,000 purchased. So here is when we place the order, we record an encumbrance. When we receive the order, we reverse that encumbrance, and then we record an expenditure. So you can see that the encumbrance was for $15,000, but the voucher when we receive it is for $14,550. So it was a piece of equipment that we had encumbered for. We have our general fund and subsidiary ledger, and then we have what goes into the government activities ledger about things that the police station did. Okay, so there can be a variety of reasons why the encumbrance was for $15,000 and the actual expenditure was $14,550, we could have gotten a discount. Governments can also get purchases discounts where we have like N2, N10. Can't even think of how to say that, where we get like a 2% discount if we pay within 10 days or the net is due within 30 days, like 210 and 30. And then this is payment of, when we're looking at vouchers payable, this payment of liabilities is looking at vouchers. And when we say due to the federal government, this can be due to the federal government for a variety of reasons. So it can be a payment that we're making as far as taxes. So we're collecting taxes on behalf of the federal government, such as payroll taxes. It can be a repayment to a loan we have received from the federal government. So there's a wide variety of reasons we might give money to the federal government. Now we have payroll and payroll taxes, and so we have what is due to the federal government and the state government. These are income taxes, so state income taxes, federal income taxes, FICA, and Medicare taxes, and then where the payroll has gone. So we have different payroll then that we're recording as a part of this government expense. We have the general fund ledger and then the subsidiary ledger, which impacts each one of these separate fund accounts. Okay. Again, where this is the governmental activities journal, then where we're recovering, we're also recording the expenses for payroll in our governmental activities. So it looks like a lot of duplication of effort. You're like, why am I recording everything 3 or 4 times? Okay, and it's really because it's in these different accounts. So we have the general fund, the expenditure subsidiary ledger, and then we have the governmental activities fund. Okay. So property taxes. So if you remember when we talked about property tax levy amounts and how we calculate the property tax levy based on what's the calculation of property values, how much property we have. We also look at uncollectibles. So uncollectible accounts, and we have to estimate that based on historical information. This is very similar to accounts receivable accounting for business entities where we record uncollectible against our accounts receivable. Okay. So property tax revenue, which we have as an example of a non-exchange revenue, one in which the government receives value without directly giving equal value in exchange. Okay, so property tax revenue is used for things like school funding. So for public schools, it can be used for roads, city infrastructure, different things like that. And where we say receives value without directly given equal value, it's because each citizen experiences that value differently. For example, you can own a home in a city and pay property taxes, but not have a child going to K through 12 schools, in which then you're paying property taxes that benefit the school district, but you're not receiving any direct value from the fact that there is a funded school district. So when we look at these levies, we have our taxes receivable, so what we say we're going to receive, the amount that we put in allowance for